Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Both the equity and bond market having a strong reaction to today's non-farm payrolls report. Just 73,000 jobs added, downward revisions. Also something to pay attention to as we're looking at over the course of the last 3 months. On average, the slowest jobs growth we have seen since back in the pandemic era. Raising the question as to whether or not maybe it was Governor Waller, not Chairman Powell, who was singing the right tune at the Fed's decision this week to not lower interest rates. Waller, of course, was citing concern over the labor market. And as we consider the overall state of the labor market, we actually had a chance here at Bloomberg TV and radio to catch up with the Labor Secretary, Lori Chavez-DeRemer, earlier today. And this is how she characterized the figures.
Certainly, we know they could have been better. But, we look at the positive because we still have a net positive, almost 500,000 new jobs since the president took office. What has happened on the ground? The one big beautiful bill by Congress, the president leaning in and keeping the promises made by negotiating fair trade deals for the American workforce. And now what we need is the Federal Reserve to jump in and lower those interest rates. I talked to businesses just yesterday who said, we've invested in our American workers. We're paying attention to our facilities. We're wanting to invest and borrow more money, but they're concerned with borrowing that more money.
So how did everybody get this so wrong? Stuart Paul joins us from World Headquarters in New York. Bloomberg Economics U.S. economist. Stuart, it's not just this month, the worst 3 months for job growth since the pandemic. And when you look back to the past couple of months here, massive revisions, prompting the question, how could we be so far off for so long?
There are a few things to keep in mind. The first is that, yes, payroll growth has been marked down. We always knew that payrolls were being overstated. In particular, we knew that private payrolls are being overstated. They still probably are being overstated. We saw 83,000 additional jobs added in the private sector. The revisions that we saw to past month's data and the weakness that we saw in the July report was mostly because of government hiring. Now, as you spoke with Molly Smith earlier today, and she has a great story about this on the terminal, there are seasonal adjustment factors at play that are affecting particularly state and local employment in the field of education. When those workers were marked as being on payrolls in the month of June, it didn't fully interact with the seasonal adjustment factor perfectly. So it's not a true shock that either payrolls are being marked down or that there are peculiarities in the interaction between actual headcount and some of the seasonal adjustment factors that are estimated at the Bureau of Labor Statistics. Yes, the labor market is cooling. Yes, today's data validates some of the arguments that we heard from Governor Waller just 2 weeks ago today on Bloomberg TV, where he was warning about a cooling labor market. But all things considered, a 0.1 percentage point uptick in the unemployment rate is really going to be the thing that matters for the broader swath of members of the Federal Open Markets Committee, for our monetary policymakers. And as we heard just this morning from from Regional Fed President Beth Hammack, she said, look, hot inflation right now means that the Fed is failing more on the price stability side of its mandate than it is on the maximum employment side of its dual mandate with just a 4.2% unemployment rate. So I don't think that either the headline numbers, the revisions to the headline numbers, or the balance of risk for the Fed has really materially changed with today's report. I see that markets are pricing in a bit more risk, considerably more risk, that the Fed would move in September. Yeah. But all things considered, our base case is still for a December move, just 25 basis points in December.
But where could the labor market ultimately be by then, Stuart, if the Fed stands pat for that long?
Well, look, we've been expecting the unemployment rate to continue rising. It would not come as a major shock to me to see the unemployment rate reaching, let's say, 4.5% at that point. That still puts us relatively more bearish on the labor market than most forecasters out there. But in terms of where we are in managing the Fed's balance of risks, with persistent core inflation, even a 4.5% unemployment rate might not be enough for the Fed to move. And if it's the case that nominal GDP growth is still running, well above what would be consistent with, let's say, the 2% target, that 2% inflation target, plus maybe 1 percentage point of real growth, I think it's fair to say that the Fed would remain on hold even if we saw a 4.5% unemployment rate.
All right, Stuart, we appreciate it as always. Stuart Paul is a U.S. economist for us at Bloomberg Economics, here with us on Bloomberg TV and radio. And joining us now for more in our Washington, D.C. studio is Ben Harris. He's Vice President and Director of Economic Studies at the Brookings Institution, also former Assistant Secretary for Economic Policy and Chief Economist at the Treasury Department. Ben, great to have you back here and to see you in our studio. As we consider these jobs figures today and the downward revisions, knowing that just days ago the Fed made the decision not to ease policy, maybe that would have been a different decision had they had these figures in hand. Do you think Chairman Powell maybe made a mistake this week?
I don't think he made a mistake this week. He's been put in this impossible position. You've got a labor market which is clearly in freeze mode. And so my interpretation of today's report is I don't remember a jobs report that provided so much clarity, because it's not just about the past month, it's about the past 3 months, right? So with the revisions, we are clearly in a situation where employers are freezing hiring. They're taking care of the workers they have, but we're only adding 35,000 jobs or so a month, and most of that is the healthcare sector. So you've got a labor market which is frozen, but on the prices side, it's very clear that we're in the middle of an inflationary episode because of tariffs, right? And so you would expect the normal lag to be 3 to 5 months after tariffs are implemented. The Fed is in an impossible position. Prices are rising. The labor market is stagnant. So I don't think that Powell made a mistake. But he's been put in this position, a position he did not ask for.
How's it going to feel in September if this kind of deterioration continues?
So if the labor market stays the same and we see the hikes that we're expecting in prices.
Further.
Yeah, it's sort of like, what is the worst case? What's the worst shock? So are we seeing prices rise more than we thought? Are we going to see core PCE go above 3%? I mean, if core PCE is above 3%, how can the Fed possibly start cutting? It can't, even if the U3 is at 4.3, 4.4, 4.5.
Yes, okay.
And so if prices continue to rise the way we expect them to, I don't think the Fed can cut, and markets disagree right now. So you see this big one-day change between yesterday and today. Yesterday, markets thought the Fed will cut between 1 and 2 times between the end of the year, between 25 and 50 bips. Now markets are certain the Fed will cut by at least 50 bips, maybe 75. But I think that maybe they're misinterpreting the impact of these higher prices owing to tariffs.
Well, so let's talk about those tariffs. Obviously, it's August 1st.
Yep.
While the levies aren't actually going to be collected until August 7th, so there's still a bit of wiggle room here. We're looking, according to Bloomberg Economics, at an aggregate tariff rate on average that's going to move up to 15.2%. What difference will that ultimately make in the prices people see at the store and how it actually tracks into inflation gauges?
So the rule of thumb is that for every percentage point increase in the average tariff rate, you see a 0.10 increase in the inflation rate. So if you're going from around a rate of around 3%, like we saw at the beginning of the Trump administration, up to 15, we're talking about 1.2 percentage points increase in inflation, which is a lot in a short period of time. And you're starting to see prices get passed through in exactly the way we would have predicted. So you can look at things like recreational goods. You can look at things like home furnishings. These are things we import from China, and those prices are rising. And so it's very clear that the tariffs are having an inflationary impact.
We're going to talk with Peter Navarro on the late edition of Balance of Power. He has sat in that chair and argued, and he would fight with you right now on the idea that tariffs are inflationary. And you've heard this line from the White House, that when you have a one-time change in prices, that it's a different phenomenon. You're seeing a trend, though, that will continue.
So I don't agree with Peter Navarro on almost anything.
I understand.
But I do agree that it is a one-time shock.
Okay.
And so when I look at tariffs, I think that the real concern with them is not the inflationary impact, for the reasons that Navarro says. It's a one-time shock. That's bad news. It's terrible timing. It's a time when you'd like to see the Fed be able to cut, and it can't. Okay. The real problem with tariffs are that it has eroded the United States' credibility as a trading partner. And you're seeing that in terms of not just trading, but also investment. Investment has been stagnant despite this $4 trillion bill. And so if you look at sort of the average tariff rate on China, they're all over the place. Tariffs start off at 10%. They went to 20%. Yeah. They're 104% for a while, 145. Now they're down to 30. I don't know what they're going to be in 3 months. Neither does Peter Navarro. Neither does President Trump. who would want to trade with someone who's rapidly switching prices like that so frequently? So it's not this one-time price shock from tariffs that really concern me. It's the erosion of our credibility as a trading partner.
Well, when we consider the investment question which you raised, the White House would contend they've had trillions of dollars in investment pledges coming in from various governments or companies announcing they're going to be building more manufacturing capacity in the U.S., even if some of that money had already been previously announced as well. Even if it does materialize, how long does it actually take to translate into more demand for labor, more American jobs, if it were to work as they say it's designed?
So the White House has no credibility on this point. The White House has no credibility on this point because we have an example in the first Trump administration. We had that phase one deal with China.
Sure.
We had hundreds of billions of dollars of commitments that China had no intention of fulfilling, and that the administration did nothing to ensure that it was fulfilled. There's outstanding confusion around these trade deals. Let's just be clear about what these trade deals are. They're frameworks. Mm-hmm. So the USMCA bill that was signed in the first Trump administration was 1,800 pages. The trade framework with the UK, which was the most comprehensive so far, was 5. Mm-hmm. These are not trade deals. There's massive confusion. You can look at the Japanese trade deal, $550 billion of investment pledges. Japan said, these aren't really investment pledges. These are loans at market rates. That's
The White House called it a blank check.
Yeah. And
so what happens 6 months to a year from now when they're trying to draw down this cash?
No one knows. No one knows. And so if I was going to characterize the U.S. economy right now, it would be chaos and confusion. And you're seeing that in businesses. You're seeing it from business leaders. They're saying, I don't know what's going to happen with trade. I don't know what's going to happen with the regulation. So what I'm doing is I'm standing pat until there's some clarity. This is really bad for American business.
Well, so should it be bad for American markets or U.S. equity markets? Because until today, where, yes, you are seeing some significant downward pressure, we were hovering around record highs. It seemed like everybody was in a pretty good mood, or at the very least, willing to look through the president's latest tariffs.
Yeah, I think the reason for that is during the transition between administrations, the way that economists and the way that financial markets were looking at the Trump administration was this kind of fight between, on the good side, you have this massive tax cut coming and you've got widespread deregulation. And a lot of executives are really excited about that. And then on the other side, you have pretty stark tariffs and a really aggressive anti-immigration platform. And so you have this fight between these two different factors. It's clear that the negative impacts of tariffs and going to zero immigration, which we haven't talked about yet, but I think is a real factor, is beating the positive impacts of this really expensive tax package and deregulation. So I think that's what you're seeing in equity markets today.
Participation in the jobs report today fell to the lowest level in months. Does that suggest full employment? People are sitting on their hands waiting for something. You add a number of mass deportations. What's that number going to look like, say, the end of this year?
So in terms of participation, when I'm looking at some of the alternative labor market metrics, you're seeing there are a lot of people who want to work who aren't. And after you spend enough time looking for a job, you're eventually going to start dropping out. And so you can expect that to happen. That's what happens, as you guys know, when economies weaken. In terms of immigration, I mean, the answer has to be, I don't know. So going back to 1990, outside of COVID, we have added in net migration in the United States between 1 million and 1.8 million people every single year. This happened during the first Trump administration. It happened during Clinton. We're about to go close to zero. So you look at estimates coming out of my colleagues at Brookings, we think we're going to be anywhere between minus 500,000 and plus about 150.
Okay.
We have never seen anything like that. And I don't know what that means. I don't know what that means for housing markets. It's probably bad for certain industries like agriculture, fishing, some manufacturing. But this is an unprecedented experiment, and we're all going to go on a bit of a ride here.
We need to stay in touch on a lot of things here, Ben Harris. It's great to have you back.
Thanks for having me.
With Brookings, now, of course, a veteran of the Biden administration's Treasury Department. Great analysis on this Jobs Day and Tariffs Day. What are we calling this? Is this Liberation Day again, or that's a week from now?
If it is, it would have to be like
August 7 is when they take effect.
Right.
Okay. So we'll call it that again in a week.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We've been having a little trouble on Wall Street following the jobs report this morning, the earnings news that you've been hearing Charlie talk about, and what a busy Friday this has become. Friday news dump. The Corporation for Public Broadcasting is closing down. We did learn that today, along with the tariff rates that will be taking effect a week from now. One of the more important stories that you may not hear about, and I'm looking at you, Boston, if you're listening to us now on 92.9 FM. It's called Drive, a new initiative by the governor of Massachusetts, and it has everything to do with federal funding or the lack thereof. Drive stands for Discovery, Research, and Innovation for a Vibrant Economy, and Governor Maura Healey is pushing this idea right now, joining us live from my former hometown of Boston. Governor Healey, it's great to see you. Welcome back to Bloomberg TV and radio. You've carved out $400 million here, an investment pool to help create jobs, to help fund research. Anyone who's been to Boston knows the dozens of research hospitals that are there, never mind the scores of universities that you have in the city and across the state. Is this a direct response to the cuts that have come from the Trump White House?
Well, Joe, thanks for having me on, and I'm really excited about this. This is what this is about. This is an investment in the Massachusetts economy. It's about job creation, and it's about the recognition that 1 in 10 research and development jobs in the United States, 1 in 10, are here in Massachusetts. We have the highest percentage of STEM graduates. Per capita, we receive the greatest amount of venture funding. We also receive the greatest amount of NIH funds. Research drives and powers the Massachusetts economy. And in the face of some uncertainty from the federal government, and sure, funding going away in some respects, I thought it was really important to lean in and to send a message, not just to the United States, but to the world. If you're an innovator, an entrepreneur, a scientist, a researcher, Massachusetts is where you want to be. We will continue to be a place that powers the world with our research, with our science. We will continue to be the place that incubates all those cures and treatments and discoveries that have really transformed the world. And that is the message that I'm trying to send with this public investment in research, which we hope to leverage with additional private dollars to really make this thing go. I'm very excited about it and what it's going to mean, not just for Massachusetts, but for the United States.
Well, Governor, that's what I wanted to ask you. As you talk about this being about job creation, but in some degree, if funding is going down, it also has to be about protecting existing jobs. So do you see the need here for this $400 million to actually grow to something much more substantial? Does that number need to get higher ultimately?
Well, Kailey, I'd love to see it grow. It's also the case, let me just explain, when I talk about research jobs, know that for every research job here that is funded, that is supported, that is spinning off so many other jobs in construction, in real estate, in hospitality, in restaurants, and retail. So it's such an important catalyst for so much. And when I think about our incredible teaching hospitals, our colleges and universities, they've had funding hits, as you know, and that directly impacts economic growth and progress, not just for Massachusetts, but for the United States, because we're competing against China. China is the one who's looking to recruit our scientists and our researchers and those who are in our labs today. I want those folks staying in Massachusetts, staying in the United States, and I want them to continue to be part of what has been so essential to American GDP and growth and dominance around the world.
I guess my question for you in this case, Governor, is would this be necessary if the federal government maintained the funding that Massachusetts was already enjoying? Or was this something that you wanted to reach for beyond the federal funding that you've seen come into Beacon Hill and do something more for research in Massachusetts? Was this idea underway before President Trump and the DOGE and the cuts?
Well, I'll say that the DOGE and the NIH cuts certainly put a focus on this and not only the primacy of research here, but the need now to make sure that is really supported. It's also the case that we did not see prior to Donald Trump's actions the efforts to recruit on our campuses, at our teaching hospitals, at our preeminent world-renowned research institutions here in Massachusetts, the presence of so many people from so many countries looking to lure American talent and intellectual assets away. So it absolutely has been precipitated by what we've seen from the federal government. That said, as governor, I would have wanted to make this investment anyways, because this is about growth and innovation in our economy, which has always driven Massachusetts jobs and economic success here.
Governor, as you well know, President Trump and his administration are in a bit of a battle with Harvard University specifically, and there has been reporting in recent days that Harvard is looking to spend, or open to spending at least, up to $500 million to settle with the administration. A group of House and Senate Democrats have now sent a letter to Harvard suggesting there will be a rigorous investigation if the school ultimately cuts a deal such as that. What would you advise Harvard to do here?
Well, I haven't spoken with Harvard about this, and my hope is Harvard will make a decision that is in the best interests of academic freedom. I think that's really important and central to American higher ed. So we'll see how that goes. But, I have expressed my concerns about what the Trump administration has done in weaponizing, whether it's DOJ or other things, against Harvard and other universities in an attempt to essentially silence critics, silence academic freedom. And, that's just, to me, un-American.
Governor Healey, you've been pretty outspoken about your opposition toward the president's tariff regime as well. With Canada specifically in mind here, you launched the Tariff Response and Business Operations Support Initiative to support local business, and you gathered a bunch of Northeastern governors and Canadian premiers back in June to talk about this. Canada is really feeling it. They're at 35% now, it looks like, outside of the USMCA. We looked at the numbers here. Massachusetts exported $3 billion in goods to Canada in 2024, making it the state's third largest trading partner. What will these tariffs on Canada mean for your economy?
Well, tariffs are a tax. And, I'm a governor who is trying to build housing as quickly as possible in my state. My lumber comes from Canada, right? So, that's just one example of how reckless this is. Canada is our largest trading partner, of course, and the reason I brought together Canadian premiers and Northeast governors a few weeks ago was to send a message. We are your friends. We are your allies. We want to continue to do business with you. We want to continue to structure energy deals and support tourism and support trade. I mean, it is so integral to our economies on both sides of the border. So, it's terribly disappointing, terribly frustrating to see the president continue to hammer on our great friend to the north. And it's going to hurt households and businesses here. And that's why I've tried to be proactive, reaching out, meeting with my Canadian allies and colleagues, working together with other governors on this issue, and also supporting our businesses here who are already feeling it. I'm all for reshoring, okay? Let's be sensible and smart about what it is that's practical to reshore and what isn't. And as governor, I'm very focused on this and just continue to be really dismayed at the devastation caused by this, because it's also the uncertainty, right? You don't have capital deployed in your state or in this country. You have people turning away from the United States for investment. That's not good for American competitiveness. That is not putting America first.
Well, when we consider the uncertain nature of the president's tariff policy, knowing how frequently, Governor, that they have changed or deadlines have moved, is it so simple for businesses in Massachusetts? The tariffs go away, okay, great, we can make a different decision, or do they have to think differently about that? I just wonder to what extent the impact will be permanent regardless of the decisions of the president.
Kailey, that's a great point, because you have to make decisions, judgments in real time about orders, right? For parts, for supplies. You have to figure out how you're going to source things. And it has become incredibly difficult for so many companies to try to figure this out. It's hard for the largest companies, right? And imagine all the small businesses who have been affected in Massachusetts and elsewhere. I'll also give you an example, because looking out behind me is the beautiful Boston skyline. This is the time of year where we like a lot of people to come, tourists, visit New England, visit Massachusetts. All of us are getting killed. Tourism numbers are off in New England between 20 and 60% as a result of our mistreatment of our Canadian friends who we count on to come here. So I'll still reach out my hand and hope to continue to find ways to do business, working with other governors, working with Canadian premiers, encouraging that, because we are in a global economy. Massachusetts is certainly in a global economy, and we need certainty and we need this insanity to be put to bed and end.
I want to ask you lastly, Governor, about the effort to redistrict in the state of Texas and a trend that might become a national one as Republicans in Texas redraw the congressional map in an effort to generate 5 more seats that President Trump has asked for that are expected to be Republican seats, an effort to maintain the Republican majority, a very thin majority in the House. I bring this up with you because not only are you a Democratic leader in this country, but we talked to Senator Ted Cruz about this last night, and he brought up your state of Massachusetts. Listen to what he said.
I'm in particular amused at the Democrats who are clutching their pearls, because the Democrats have always been much, much more ruthless in gerrymandering. I'll give you an example. The state of Massachusetts. About 35% of Massachusetts votes Republican. About 60 to 65% votes Democrat. Do you know what percent of Massachusetts congressional delegation is Republican?
I believe it's 0. Yeah.
They drew it, so not a single Republican is elected.
I reminded him of some of the other redistricting phenomena that have happened that redistrict a couple of lawmakers right out of their own districts. I'm just wondering if he has a point there, Governor, and where you'd put the Republican seat in Massachusetts.
Well, first of all, I'm not clutching my pearls, Senator. What I am is a governor who believes in fair representation, and what's going on in Texas is just, it's an abomination right now, the effort to redraw those maps. The senator himself made the point, which is that 65% of the voters in Massachusetts happen to not be Republicans. So we end up with a delegation that is right now all Democrat. But, I will do everything as governor to always ensure that there is fair play and fair representation. Clearly, there are governors elsewhere, like Governor Abbott, working together with AG Paxton, that are not about that. They are about playing games right now and playing politics to try to retain a very thin House majority. That's what's happening.
All right, Governor, we thank you so much for joining us here on Bloomberg TV and radio, live from our Boston bureau. The governor of Massachusetts, Maura Healey, here with us on Balance of Power, talking not just redistricting, but of course the economic impact being felt in Massachusetts by the policies of the Trump administration, be it cuts to funding for things like research or, of course, the tariff policy of the president, which is in focus today as we have the announcement, but not necessarily the collection yet, of these duties on a number of our trading partners, tariffs ranging from a 10% baseline all the way up to around 40% going into effect as of August 7th, on the very same day that we get a softer than expected jobs report at just 73,000 jobs. So for more on this, we turn to our political panel. Jeannie Shanzano is with us, Democratic analyst, Bloomberg Politics contributor, and senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Lisa Camusta-Miller, Republican strategist, former RNC communications director, and host of the Friday Reporter podcast. Lisa, when we consider the president obviously stands by his economic policies, he has touted the strong GDP figures we got earlier this week. He believes tariffs are a good thing for America, not a bad thing. When you put them together with what we just heard from Governor Healey about how it's already impacting businesses and potentially hiring decisions with the softer jobs report, is he about to face the need to U-turn on this once again?
Oh, he'll never admit that what he's put in place is something that should be reversed, but he certainly will keep an eye on the markets and try to do everything he can to make it appear like he has won, that his policies are winning and that they're doing the right thing for the American economy. I think, though, that the market itself this morning reacted not only to the announcements that he offered last night as it relates to last minute trade activity, but also this morning keeping a close eye on how that's going to all change and react in a real time. I think that the president probably is paying very close attention and will continue to retool, not in a retreat, but more in a way to say he's watching and he's paying attention. He's going to do whatever it can to make the economy a winner.
Jeannie, does Maura Healey have a model there for other states around the country to make up for the lack of federal funding, or is this a Massachusetts-specific issue when it comes to the many universities and research hospitals in that state?
It really struck me listening to your conversation with Governor Healey. What a breath of fresh air And this is what you hear more and more from voters. They are not turning to the federal government. They are turning to their local and state officials like Governor Kailey to say, what do we do at this time of enormous uncertainty? And she does have a plan with this drive to address what has been taken from the state as a result of DOGE cuts and other things. And I think we will see other governors, left and right, Republican and Democrat, try to emulate that. But, even more than the specifics, I feel like listening to her in a very common sense, calm way, she's talking about what so many people are feeling today as a result of tariffs, the cuts to the Corporation for Public Broadcasting, so much unease going on. To hear that there are leaders on the ground who know what people are feeling and are prepared to address those is a reassuring and much reassuring needed conversation to have. So I was very grateful to listen to you all talk to her about what she's doing for her state so close to the Canadian border at this time of uncertainty.
Yeah. Well, we appreciate going overtime with our panel here. Many thanks to Jeannie Shanzano, Bloomberg Politics contributor, and Lisa Camuso-Miller, former RNC comms director. Look for her Friday Reporter podcast. Many thanks to you both for the insights.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Market's a big part of the story today in Washington as the tariff rates are rolled out. Charlie just mentioned it. We got a big pile of paper. End of the day yesterday, more of this rolled through the evening here, and we got a whole new date. I was going to say, happy Liberation Day or whatever this is, but circle August 7 on your calendar. That's the actual date. I guess this takes hold at 12:01 a.m. August 7. So you got a week if you still want to make a deal. Of course, this was all supposed to take effect today, but we understand that the extra week was needed for Customs and Border Protection to update the tariff schedule with all of these new numbers. 15%, the big industrialized economies, European Union, Japan, South Korea, we talked about that. Those with a small trade deficit get 15%. Countries with which the U.S. runs a trade surplus get 10%. And if you're Canada, well, call back another time. Jameson Greer was on Bloomberg TV and radio this morning. The U.S. Trade Representative, of course, had a lot to do with the outcome. Here's what he said.
We'll be finishing the paperwork in the next weeks and maybe a couple of months. But these deals are pretty much set. They are set, right? We wouldn't make an agreement unless we all knew the contours of it, and the countries knew it. And it's an exciting time because the president has essentially reset the global trading system. And so we'll be finalizing everything that's been agreed to on paper and then monitoring compliance going forward.
It doesn't look like Wall Street is in love with this. Not that a lot of this is a surprise. We've got jobs data that you've been hearing about kind of confusing things a little bit too, but it's decidedly lower today. The S&P 500 is down 75 points, more than 1%. NASDAQ's down 350, 1.5%. We've got a big move in the bond market here. The VIX is back above 19. Even the companies with good earnings. Look at ExxonMobil turning negative, down a couple of dollars. Apple had a nice story to tell. It's down almost $5. And if you miss estimates, boy, you're going to be punished. Amazon, not inspired by the forecast. It's down $18 or 8%. So we've got a lot at play here. But we want to talk about the fact that we actually have these numbers now, the tariffs, and as well, what's happening on Capitol Hill with our good friend Patrick McHenry, Bloomberg Politics contributor. I always love saying that. The former Republican congressman, former chair of financial services, who actually held the speaker's gavel for a short time. Mr. McHenry, great to see you. Happy Friday. The president was talking about Jay Powell earlier today on Truth Social, as he's been known to do. Too little, too late, he writes. Jerome Too Late Powell is a disaster. Drop the rate. It's funny, Donald Trump never, I guess, talks like this to his face. But is he starting to sound like he's on the right side of history? It's time to start cutting. What do you think?
Well, I think it is. But look, the Federal Reserve is an independent monetary authority in our system. Yeah. It's well designed that way. The Supreme Court agrees. This is longstanding practice for the United States. That's one. Two, there is the political effect here, which is when the American people see an economy that they don't like, who is to blame? And the president's reminding them to blame the Federal Reserve, not the Republicans they elected to run Washington. So that is a useful political tool that is at the president's disposal, that this president has used more than other presidents, but he's not the only one to have used this. They complained of the Federal Reserve System. The LBJ and FDR were quite notable in using it as well. So he's not the first, but he is obviously the loudest and the most adept at stoking those flames.
We tend to think of Patrick McHenry as an old-style conservative Republican a la Ronald Reagan. Correct me if I'm wrong, Congressman.
That's about right.
Tariffs are not part of that ideology. Where are you with this tariff regime now that we actually have the numbers, and how worried are you about what happens to the economy in the second half of the year?
Well, there are two issues here. One is allowing China to come into the first world trading regime, but getting the rules of the third world. And so I think some of our trading agreements have benefited other countries to a much more substantial impact to them than to us. We've given away a lot of our native industries in some of these deals. So while you can be a free trader, you don't have to necessarily agree with the contours of each one of the trading regimes that we set up, each negotiation. The president's resetting that, and he believes by resetting these tariffs, we are going to get back to a much more normative set of competition and in this global trading regime. So some of this is quite practical. This is why you haven't seen Hill Republicans who are free traders speak up in any organized fashion. So that is what he's speaking to. Now, how he does it, of course, look, I mean, as somebody who thinks we have benefited overall by being the biggest trading partner in the world, that has given us the ability of a strong dollar policy. It has made us the reserve currency for the world. It's given us a greater borrowing power. There are a lot of benefits that have come from our strength as a trading partner. I think we have to maintain that edge, and we have to be the place that people want to come to, that people, intellectual property, come to, a place for capital, and also a place that leads the world in trade. And we don't want to undermine that. So that's the countervailing piece that I think has not been hotly pushed back on this administration. I think it should be sharpened up.
Interesting. Well, we love talking to you because you have a real sensitivity to the economy here. And of course, following your chairmanship, you have such a good sense of what this means for the Federal Reserve when we start talking about interest rates, the idea that this could creep into the data. But we've also got this softer than expected jobs report today. And a lot of people, the narrative out there is Jay Powell would have been cutting in February if it were not for Donald Trump himself and the tariff regime. Do you believe that? And do you think that we do see some kind of inflation spike in the next few months?
Well, I think that's what the market's trying to figure out. But the president's been given the benefit of the doubt by elected officials, like by other Republicans in Washington, because you've not seen the economic harm of this tariff fight. And I think there's a notion and understanding that the real culmination of all of this discussion about tariffs is the trading relationship with China and the world. And everything that the president has done this year with national security, international presence and security negotiations and endeavors, and tariff conversations are all laying the predicate for a big deal with China. And so they want to see that. They want to see that big deal. And they're willing to go along with less optimistic economic data in order to get to that deal. I think the markets see that, but the data is now showing that this uncertainty and this cost structure is creating a burden on the U.S. economy. The question is to the extent, and I think that's why the market is I think that's why you're seeing VIX up and Congress is out. And so I don't think you're going to hear much until September about tariffs or any discussion about the effects.
Well, of course, the whole conversation when members come back is going to be about a shutdown. I know you're hearing this as well as we are. Democrats say they're out because of the rescissions package. Do you think we shut down in the fall?
I think so. I think you need Democratic votes through the Senate, United States Senate, in order to keep the government open. I think what you'll see is a move for a continuing resolution to keep the government open, and that passed the House. And then it gets to the Senate, and it's really up to the Senate minority, the Democrats, on whether or not they're going to allow that to go to the president's desk. I think the incentives right now for Chuck Schumer and the Democrat leadership in Washington is to show that they have some fight, that they're going to fight President Trump. And so they're going to try to lay the blame of a government shutdown at the president's feet. Right. It's going to be a huge battle for the fall, and I think that will cloud the rest of the debate, the public policy debate that could otherwise be quite bipartisan.
It's amazing how predictable this seems to be here. Patrick McHenry, I have to ask you about what's going on in your home state before you leave us. There's a new poll out on the North Carolina Senate race. Now that your former governor, Roy Cooper, has jumped in here, Emerson College polling finds Cooper with a 6-point lead in this race over Michael Whatley, 47 to 41%. You've got 12% undecided. Does this sound right to you? And how much of an uphill battle will Michael Whatley have in this race?
So two things. There's something for everyone in this poll. If you're Roy Cooper, you say, well, look, I'm leading. Got in the race. Now you have a Democratic lead for what is a current Republican-held seat. So they get to have that narrative. But the Republicans have the narrative of saying, we've got a guy who's never been elected to anything. And he's within 6 points of a popular 2-term Democratic governor. And so therefore, what we know is that this will be a very expensive, probably the most expensive Senate race in the country this election cycle. And it will be a nasty dogfight based off the fact that we are North Carolina is a narrowly divided state. So watch out. It's going to be long and nasty.
God knows it. We heard from Donald Trump on this. He posted about this as well on Truth Social. Michael Whatley has my complete and total endorsement. This is the bottom of a very long post. He will never let you down. All caps, exclamation point. We're going to have to keep talking about this one. Patrick McHenry, I hope you're having a great summer, and thank you for chiming in, as always. Bloomberg Politics contributor, former Republican Congressman Patrick McHenry, with his view on the Friday edition here of Balance of Power. Really fascinating to look at these polling results in, again, what will likely be the most expensive Senate contest. It's going to have to be between North Carolina and Texas here, right? Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.